Another poor day for the broad market, leading to a very poor start to the year for the broad market, particularly the NASDAQ. However, not as much over here. We're seeing a return to multi-year, now almost 8-year highs in the price of oil, and new 52-week highs in our favorite oil stocks. It's great to see. We like to see that. However, we're preparing for the next step in the turnaround phase. And like we've seen everything come to fruition in our oil story, hopefully we'll be able to see things go over there. Now, what is happening with me and energy? I am beginning to trim my positions, not because I'm bearish on the position, and I'm not trimming a significant chunk, significant being over 50%. But we've seen some gains. And today I heard the first talk out of the White House since the Strategic Petroleum Reserve release, which they hoped would keep prices down and clearly has not. And my assumption is over the next couple weeks, you're going to see them yap in their mouth, and it might cause some short-term volatility. So in an effort to lock in some gains and avoid that volatility, I am trimming my options positions. My stocks haven't touched. Plan on being multi-year owners. But given how much my three biggest, just put things in perspective, my three biggest positions are ExxonMobil, Schlumberger, March 18, $30 strike calls, and Schlumberger, 2750, June 17th, 19th, we'll call it, 21st, calls. So quite large positions, quite a lot of option weighting. I'm taking down some, and have been taking down actually for several days now, the March 18th $30 calls. Just because we've got a month or two left in those, I think we're getting up to $40 in Schlumberger. I think we get through that level in that stock to put things in perspective. But I do think the next couple weeks is going to be a lot of chop. Not a lot of chop, but poses risk of chop. And just to be prudent, I'm going to take a little bit of risk off the table. I've still got 125 of those March 18 calls. I originally had 285, though. So I've taken that position almost half. But that is one of many Schlumberger option positions, one of many OIH option positions. So you get the picture here. I have quite a lot riding on energy stocks. And I'm starting to realize gains there. And I'm building a cash position right now. There's plenty of market volatility to go around. We're seeing good gains over here. But I think the time will come to start buying stocks. And I think the Fed, people anticipate the Fed is going to be very hawkish. I think the Fed has definitely gotten more hawkish from where it was last year. But I think the market and the bond market, particularly with this rather strong and swift move upwards, is expecting a little too bit of a hawkish Fed, in my opinion. I heard some things in that last meeting, which everyone seems to have forgotten, because nobody's mentioning it, and it's that Jerome Powell literally said it's a long road to normal. So everyone seems to be acting as if the Fed is going to normalize the path very quickly. But they said it was a long road. A long road. Not a short path. Not a shortcut. A long road. A long road. Okay? Where we're going, we don't need roads. Just kidding. We got one. We got one. So I don't think they're going to do anything too egregious. I think they might end up being somewhat more dovish next week, being a little calmer. And hopefully that will prove to be the bottom in some of these 10x growth stocks, because while we're having some fantastic gains in energy, I'm not seeing as great gains in my 10x growth stocks. Even though the energy gains are so big, I'm up well over 30% for the year. Anyways, I'm planning on deploying this cash into those stocks imminently. Have been. And I'm excited to do that more I think many of them are doing very well in terms of their product, maybe not the stock. I actually saw an article today on Seeking Alpha. Got the email about it after the close just a couple minutes ago about CRISPR Therapeutics. And if you are a loyal follower of this channel, you may have heard that name. And if you go way back, if you go to the homepage of this channel, we've got a section titled Value Investors Only. I get it's a growth stock, but we're talking price here. We have a video on CRISPR Therapeutics. Just to give you a quick little fact, the market cap's about $5 billion. We got $2.5 billion in cash on the balance sheet. So you can do some math equations there. Pretty good if you ask me. What you're getting for the bang for the buck. That's how I'm thinking about this market right now. Definitely think rates are going to rise. They should. But I don't think the Fed is going to be particularly hawkish. That may provide some surprise to the market. It may put a bottom in some stocks that have spent the last year declining. I think they present good buying opportunities, and Microsoft certainly saw one in Activision Blizzard, which has been down over the last year. So, just food for thought, just letting you know where I'm going, where I've been, and I'm always skating where the puck's going. I think it's going to be in companies that are curing genetic disease and editing genes and doing prevention over treatment, not what pharma does. Big pharma, treatment over prevention. Think about that for a second. Treatment over prevention. What pays more money? What has more recurring revenue? Treatment over prevention. I believe the truth always wins, and the Lord will shine bright on those who do His will. And I think His will is the right thing when it comes to health and medicine, which is prevention over treatment. So that's today's video. Until next time, peace out.